Alright guys, so in this video let me walk you through exactly when to re-enter a trade after the price maybe took you out at break even, and when to simply stay away and walk away from the charts. Because I see many traders making that mistake. They are entering a position, the price is coming back to their entry point around here, and they do not know if they should remove back their stop losses from break even, if they should let the market develop a little bit, or simply walk away. So that's why it's important to make the difference between where is the liquidation, where is the mitigation, is there something else that could give the price enough power to produce a move, and are we stuck on the last barrier, which is the last order block that pushed the price into the liquidity. So I want to talk about that in this video. This is an important concept. And yeah, I've recorded the live execution so you can see exactly what I was looking for. And this is the analysis before the move. And by the way, if you want to see all my analysis, you have just to click the link in the description. Basically, we were around that level where I made that analysis on Euro USD. And here I said to myself, okay, we have two interesting levels. We have Asia high, not Asia high alone. We had Asia high plus some break-even traders that took the short position here. So we had an order flow perspective plus relevant liquidity. And on Asia low, we had some resting orders because I checked the data from the futures on 6E and I saw some interesting resting orders around that region. So at that point, when I made the analysis, I said to myself, okay, I'm going to place an alert here and here. And I'm going to wait for the market to hit one of those zones and see if I can potentially take a trade from here to here or here to here. So this is what I was looking for. I was looking for the market to potentially here because we were very near to Asia low. I was looking for the market to create a kind of trap just above the Asia low. Because if we have some resting orders on Asia low, that means the price can provide a reaction. But on top of that, if we have some relevant liquidity around that region on top of the order flow, that means the price can provide potentially a good reaction. And this is when it can be worth the risk to enter the position on the market. So that was my point of view on Euro USD. As you can see, the goal is not to predict. The goal is to have different scenarios in your mind, and then you wait for some good price action confirmations in order to enter the trade. So this is what here I was looking for. I was looking for the price to potentially move into that order flow area. Plus, I was looking for a move into the stop losses if we had a potential trap forming, which is exactly what we've done. So that was here the before. I was looking for that move into the break-even traders. And so what we've done, I'm going to jump on the 1 minute so you can understand what happened. On the 1 minute on Euro USD, as you can see in terms of market structure, we were just making lower lows, lower highs, lower lows, lower highs, lower lows, lower lows. And for the first time, as you can see, London Open, boom, break to the upside. So there is a lot of traders watching the charts at that moment. And these guys saw exactly the price going from bearish to finally breaking structure to the upside. So majority of smart money concept traders and order block traders, what they're gonna do, they're gonna try to take a buy position when the price is coming back to the order block. And what happened? Price came back into the order block, made a reaction. And so when we made the reaction, we had evidence that we had some traders positioning themselves here, placing their stop losses just below the last low or below the Asia low. And so at that moment, I say to myself, okay, I'm just gonna wait right now and see if we are tapping that level with some good vector candles, which is a good indication that institutions are pushing the price for a reason. If you see, at the London Open, huge bearish candle in that case. That's for a reason, because institutions have just checked the order books and they saw that here that represents a good liquidity area where they can potentially enter position, and this is when we can have a reaction when the majority of traders are going to be stopped out of the market. So that's the situation we had. And you're going to see this trade is pretty interesting because I had a first entry. The market came back to my entry point. I decided to remove my stop loss from break even. And after that, I closed some profit here. So this is a very interesting process. So here, let's do the analysis. We have the break to the upside. We have the price coming back to the other block. We have stop losses just below, right here and right here. So this is an area of stop losses. So we can call it stop loss box, okay? And what the price did after that, the price, boom, melt down into that zone. And now when I went on the 5-minute time frame, I saw this good bearish candle. And as you can see, within 3 candles, we went from this to taking out that liquidity. So I said to myself, okay, it might be interesting now to potentially enter a trade because we might have a reaction because we just liquidated the stop losses from these guys and also the resting orders here. So my first trade here was simply trading the reaction of the liquidation. And this is when I say to myself, let's take a buy position. So this is the first entry. And by the way, I recorded those entries on my MT4. At that time, I was eating the gym. So it was kind of difficult to me to manage everything, but I managed to record the live entry. So this is my entry. As you can see, I'm not scared to enter the market that way because I understand what's going on. I understand that we have a liquidation of something relevant, and I understand that we can have at least a 5 pips reaction so I can place my stop loss to break even, which is what we did. I entered the market here, and what the price did, we turned from bearish to bullish. And here was my first entry. And so what was the next candle? The next candle was a good bullish candle. So I said to myself, okay, this candle, as you can clearly see, is a 50% body candle, but the next one is a good bullish candle. That means within that candle, we had a lot of OFVs created. So that means the 50% of that 50% body candle can potentially produce a reaction if we are coming back. So when I set the break even here, I knew that if we were coming back, we could potentially react from the 50%. And as you can see, when we made that reaction, what the price did, the price went here and tapped this other 50% body candle, which is the last order block that pushed the price into the zone, which is called the barrier. And so the price came back into the barrier and made a reaction. And here I was between my sets and I said to myself, okay, I'll have to potentially remove the stop loss from break even. Not because I'm gambling, because I'm understanding what's going on. This first reaction was the reaction of the liquidation. And here, if we are potentially reacting again, that could be the reaction of the mitigation. So this is pretty much why I decided to remove my stop loss from break even. And so what the market did, the market came back below the 50% and produced a reaction. And at that moment, I said to myself, okay, right now, I'm just gonna let the market run and I'm just gonna go at break even in any case. Because if the market here is coming back again, what is going to push the market away from that zone? That's the question you need to ask yourself every single time you want to re-enter a trade. What can be pushing the price away from my actual entry point? And in that case, as you can clearly see, the first reaction was the reaction of the relevant buy side liquidity being taken out. Second reaction was the mitigation of the liquidation order block below the 50%. That means majority of OFVs have been triggered. And so if we are coming back again, there's a small chance that we can provide a reaction, and we are going more likely to go below to grab even more liquidity. So here I said to myself, okay, now go at break even. And so the market developed, and as you can see, we did something even interesting, which is something a little bit advanced. We came back into this order block at the 50%. So here, this is pretty interesting. We decided to trigger the majority of the OFVs of this 50% body candle. That means if we are coming back again, there's a high chance that we can, boom, break to the upside, which is why I decided to set here 50% of my profit out, because that was my first trade of the week. And remember from my last videos, when we have profit between our hands, we want to take it. So this is very important to pay yourself as a trader. And what happened after that? Price made some reaction. The price went very near to my stop loss, as you can see, one time and also a second time. Here that was very close. I almost got stopped out by a pip. And then we finally, I'm going to show you the 1 minute. We made the reaction and boom, we just liquidated that order block. And here I took 50% out of the market, and the other 50% has been stopped out straight away at break even. And there's no way that I'm gonna re-enter the market here, simply because the liquidation was there, the mitigation was there, and if I'm entering here, I know that I'm just entering based on the order flow. And since the Forex market is a very liquid market, when I'm entering a trade, I really want to have liquidity into my trade. So this is pretty much why I decided here to not re-enter the trade. And many traders, what they do is that when they are taking a trade, they are not even analyzing what's happening behind price. They are entering the market here, and what they just think about is winning their trades, and they stop analyzing the market and the way it's developing. This is very important, okay? When you want to take a trade, that's cool. If the price is moving in your favor, that's cool. But you need to monitor that trade. You need to see the way the market structure is forming. If we are creating sell-side liquidity, are we creating buy-side liquidity? And that's the question you need to ask yourself. So here, that was the first entry. Here, that was the second entry, right over here. So this is the second screenshot, not the second entry. So you can see reaction, we were making the reaction. And then here, this is when I've placed my stop loss at break even after, as you can see, the mitigation of the liquidation order block. So trading is all about really paying attention to all the details. Otherwise, you will get lost. So when you understand what you're doing, you will be able to adapt the risk accordingly. Okay, this is very important. And so yeah, that's the result of that trade. I've shared everything here. So if you want to see a little bit the way I'm approaching the market in live, you can just click the link in the description and you will be able to access the live analysis. So I hope you guys enjoyed that video. I just wanted to cover that important concept, and I hope you took some notes.